Well, it's time now to go to the Money Desk here on Today with our business editor, Devin Murugan. Good afternoon. You're back with us. Now, as we look at the market fallout from the events around President Ramaphosa, what's happening? We saw the rand falling badly yesterday.
It did, Brady, and in fact, the rand took a knock, about a 4% drop against the US dollar. The rand has recovered slightly against the US currency, and we saw that slump on the back of President Cyril Ramaphosa's future. That's what investors were concerned about. It's now hovering around 17.25 and 17.30 to the US dollar. Let me just very quickly take you through what happened over the past few days. And if you look at as it left November, getting from Tuesday into Wednesday, the rand was pretty much in a very strong position because everything around the global environment supported a strengthening rand. And then you had the events of Tuesday evening creeping into Wednesday, and you saw that huge slump as indicated by that steep knockdown going upwards there, the rand losing about 4% of the US dollar. And then today, as the week ends, there seems to be some stability creeping in there, and investors were digesting the possible exit of Ramaphosa over this Phala saga. Reports that the president may resign, as we said, had thrown the country's political outlook into increased doubt. Hence, you saw that little steep, that very steep drop there against the US dollar. But as I said, the currency stabilizing today with the rand gaining about 2% since yesterday's close. I want to bring in Peter Attard Mantalto. He's with the Intellidex, just to get his reaction or his thoughts on what had happened so far. I'm not quite sure if Peter is with us. Peter, are you with us?
Good afternoon.
So very interesting. We look at what happened with the markets today, and just very quickly, let's start there. We saw the rand taking that steep, very volatile and chaotic reaction to what happened over Wednesday. Some stability now. What do you make of how the markets reacted to the events around the president?
Well, there's been some quite extreme volatility. Liquidity has not been too bad, including in the bond market as well. There are ultimate backstops there, of course, from the SARB as well, but clearly pricing in more risk premium both to bonds and into the currency on the uncertainty to come. The real problem we have here is that the president, I think, probably was ready to resign yesterday, has now been talked back and talked into fighting for more time. But how you build out of this a positive case, obviously, for reforms to still continue, etc., after December, assuming he wins, is still exceptionally challenging. And so I think that's why markets are settling back a bit, but still at slightly weaker levels.
Yeah, let's just look back, and here's a president that came in on the promise of actually boosting up the economy, going ahead with some of those structural reforms, and there indeed have been some gains, especially a few of these court appearances that we're seeing on the so-called corruption front. But he was. A lot of analysts will tell you that there never really seemed to have been control from this president, and I suppose investors were watching out for that. And the outlook for the political economy is something that they were nervous about. How do you think they're digesting that as they look forward on what will happen over the next few hours?
Well, the problem the president has had is the same as the market, that a lot of the reforms that have been happening are quite long-term. In terms of ports, super long-term. The reforms being done now won't really have an impact for sort of 7 to 10 years. The changes on electricity are only really going to have an impact probably into the end of 2024, with the 1.3 gigawatts currently now registered under the ERA Schedule 2 change last year, only really coming on stream over that sort of another 18 months or so. So that's really been his problem politically. He's not getting the growth outcome. He's not had the sentiment outcome. The drops in unemployment, etc., really to help. But that doesn't mean stuff has not happened. It just takes a long time to filter through. And this was always the risk. I think we talked about this together on the program in the past. So it's hard for him to build a case around that. And this, I think, is my problem thinking about December, thinking about 2024. It's very much a least bad type of situation. And that's not really very encouraging for investors thinking about least bad outcomes. And that doesn't flatten the yield curve massively. It doesn't support, I think, growth more widely.
Yeah. Does South Africa still have an investment case, much needed investment case, if President Cyril Ramaphosa is no longer in that position in the days to come? Will it affect the economy on an investment front?
Well, in the short term, there would be a transition and probably a degree of stability. So I think that's not sort of quite the focus. The focus is obviously on who comes out of December now. And, I think if there are some options and people who, are going to have pause in the kitty, then the investment case can lapse very, very quickly. And I think, whilst a lot of companies, rating agencies, and analysts dropped the ball during the Zuma years, it's not necessarily going to happen again. There would be quite a whack back, I think, against any attempts to increase corruption. There's, of course, then middle ground people. This is the interesting thing, of course, about potential people like Paul Mashatile, where you could actually see reform continuing, but maybe a degree of complexity, let's put it, on the side. And I think that'd be very hard for the markets really to try and fathom. Let's say that you're introducing ESCOM 2.0 on the side, you're also introducing some energy reforms around the place as well, and fiscal remains tight. That's a pretty mixed sort of view and pretty hard people to deal with.
Is a final question before I let you go, Peter. Is there a possibility that this could result in policy change? Because ultimately investors are worried about policy consistencies through all of these chaotic political maneuvers. Am I right? Do you think there would be any sort of significant policy change that investors would be looking out for as we pass through December?
So the baseline on Wednesday morning was no, not particularly. There's going to be stuff coming from the floor on NHI, on the basic income grant and the wealth tax. All that was kind of known, since the July policy conference. The real question in my mind is, how does he stay, and what does he have to give up or sell, if you like, to stay? Does he, go mad on coal, for instance? I don't think that will happen, but that's the kind of question that isn't really being debated. I think if he really, really wants to stay, he could stay by giving up various things on policy, on cabinet positions, etc. And that's the uncertainty here, and I think that's the fear that. And the complexity of him staying actually is those kind of deals that might have to be made.
All right, Peter Attard Mantalto from Intellidex, thanks very much indeed for talking to us. All right, let's take a